Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I've known him for over a decade. He has been making YouTube videos as long as I have financial YouTube videos, daily market analysis. He's a former Wall Street floor trader. Also, go and get his book about his life story. Pretty remarkable that he grew up in New York. He went into the military. He was a physician's assistant. Now he's a successful financial YouTuber and entrepreneur. Greg Mannarino, thank you for joining me again.
Thanks for having me, buddy. I'm really happy to be here. Honestly, it's been way too long.
Yeah, I remember years ago when you were trying to get me on Greg Hunter, and Greg was telling me I had to get a HD webcam, and back then they didn't have like the Zoom background filler and all that. And I was like, oh, I had a day job at a newsletter company, and I didn't want to. I was actually they were warning me about making YouTube videos. I almost got fired then for that.
I'm not surprised.
Yeah, that was like a decade ago, like 2013-ish.
Uh,
So we're recording this interview on Tuesday, July 30th, 2024. Lots of craziness going on right now. I want to get your thoughts on how things have adapted over the last 10 or 15 years since you've been covering these markets for so long. Did you think we'd get to the point where all these central banks would just flood the market with currency and debt monetization QE? They change the rules. When a bank gets in trouble, they'd put a new liquidity program in. If the Bank of Japan has a problem with their currency, the Fed just puts a swap line. Did you think we'd get to this point where like all these rules would be changed and goalposts would be moved?
no, man. I don't think anybody foresaw how this would get as twisted and distorted as it is right now. I mean, honestly, you know this better than anybody because honestly, you're one of the smartest guys that I know, and I mean that. This thing has gone so far beyond where any man or any woman has ever gone before. It is just honestly taken on a whole new thing. And every day it just seems to get more twisted from the day before. I mean, look, it's a no-brainer here how what they're doing to us, where they're pushing us, the direction that they're pushing us in. I feel that, the whole system is coming apart. Oh, sure, the markets may be at or very close to new record highs. We've had a series of record highs here with regard to the US markets for, I don't know, almost 8, 10 weeks now in a row. It's the mechanism behind it, the easy money, the pumping, the faking, the rigging of the system here, currency devaluation, asset purchases by the Federal Reserve, other central banks working in concert here. And so, look, I don't think it's any surprise to the people that do follow our work that we're in this kind of a spot. I mean, I think we need to just focus on, okay, where's this going from here? I don't waste time anymore thinking about, when is the day or the moment or the week when this whole thing's going to come down. I think it's coming down already. And we're just living in the side effect of it. And we're seeing global inflation take off like we've never seen before. Then we're being told the propaganda that it's cooling and it's getting better and it's not rising. And then we have the deceptions, the nonsensical freak show, across the spectrum of politics. You're keeping people, wrapped around their fingers here, keeping people focused on nonsensical things here. But that's part of it. Look, we've seen this before. People can go back on history and see how people have been misled by this so-called power elite here, the political nonsense, right to the slaughter. And that's exactly what's going on. But that doesn't mean, at least in my view, and I'm sure you would agree too, that there is an enormous amounts of opportunity here. I mean, it's everywhere. Instead of worrying about, well, this market's going to crash tomorrow, the next day, next week, or I shouldn't put my cash to work here, or where should I put my cash to work? This is a no-brainer to me. What I've come away with all these years is just understanding, look, instead of trying to take the opposite side of this thing, get on it. Get on this machine here that, again, has presented opportunity people. I think there's a lot more opportunity to come, and then preparing for what we're eventually going. This is not going to last. We are going to get an implosion in the debt market that people aren't going to believe, and it's not by accident. This is all being set up deliberately. I think pretty much people who follow work understand that, and what they just don't know is what they should do about it. And it's a pretty simple, algorithm in my way, in many ways, just what you need to do, understanding how cash flows through the markets, where it's most likely to go, and just staying on the right side of it. It just seems to me too easy, and that being that it's too easy is a worry for me, because you realize when things do get too easy, that means that there's going to be obviously a moment here where this is going to turn around. I'm not saying it's going to be anytime soon, but I don't think we're too
Well, look
far
at
off.
Nvidia, Greg. Look at Nvidia. I mean, there was tons of retail traders, people trading on their phones that thought Nvidia was guaranteed to go up another $1 trillion in market cap, and for what, a few months it did. And now
Right.
look, we're having a very sizable correction because that was a very overcrowded trade.
Well, that shouldn't surprise anyone. I mean, that's you always see this. I tell people, and I told people, and I tell people on my blog, I say, don't get overly hyped into this kind of stuff because if you do, you're going to end up being hurt. You got to think logically. There are some people that are going to make a ton of money doing that kind of stuff, getting in and out of that if they can time it right. But that's a near impossibility. How about Jim Cramer's call with CrowdStrike? He just called the bottom 2 days ago. Today it dropped 12%.
Contrarian indicator.
I mean, you can't make this stuff up. But, people, what happens, unfortunately, look, people like you and me, we learn from, I guess, look, I can tell people, and I've told people this, I have made more mistakes in the market than probably any 10 people combined. But I've learned from that. I've learned what not to do, even though I've repeated some of those mistakes multiple times until I get smacked across the face enough to realize what I'm not supposed to do. Now, I think because I've been in the trenches for so many freaking years and I've seen so many things happen that I've managed to kind of rearrange the wiring in my brain to get myself to such a point where I can look at this thing realistically and not get involved in these meme trades, these hyper trades. People ask me about this stuff all the time. I tell them avoid it like the plague, because what's going to end up happening is this: very few people are going to win, but most people are going to lose. And so it's always the same story anyway. But what people should learn is avoid that stuff like the plague. I think, honestly, going back to Nvidia though, wait for this to clear out a little bit. I think there's going to be an opportunity here. I think big tech AI stuff, this is going to be the place to be moving forward, especially if they start cutting rates which they're going to do. They're already in the debt market. We've seen a pretty crazy phenomenon go on with regard to the debt market over the past several weeks. I mean, who's buying all the debt? It's unbelievable. And it's opening up that doorway for cash to make its way into the stock market. Record high as as the economy continues to free fall. And I've been telling people for the longest time, watch what's going to happen. The faster the economy goes down, the harder the market's going to go. And I still say that's going to happen here. And as we move closer to the presidential selection, things are going to get even more crazy here, especially with regard to Bitcoin and the crypto space as well. A lot of opportunity here, in my opinion. So people shouldn't look at this as, okay, well, it's all a nightmare, which it is. But just because it's a nightmare for some doesn't mean you can't make it work for you.
Well, they have to track the liquidity flows, like Stanley Druckenmiller said. As he said, his theory of trading and investing is, where are the central bank liquidity flows going? Are they adding liquidity? Are they removing liquidity? And where is it going to specifically? So if you can track the liquidity flows, you can kind of guess. So if these other central banks then are cutting interest rates and they're adding liquidity to the system, it looks to me, Greg, like a lot of that other liquidity from the other central banks, the European Central Bank, the Bank of Canada, the Bank of England, which just cut rates too. It looks like it's ending up here in the U.S. Stock market, especially the NASDAQ 100.
Well, we're also, with regard to the NASDAQ 100, we're kind of seeing some seasonality here as well. So you would expect to see that rotation. But look, that's another thing. I don't even do that stuff anymore. I used to be in this market, day trading, mostly swing trading, for a very, very, very long time. And as I've gotten older, I've become mellow and more worldly. I've discovered this kind of a young man's game. I just turned 59 years old, man. So I got to kind of I'm at a different level at this point in my life. And I kind of take it easy.
Are you compounding dividend stocks? What are you, rental properties? What do you?
I own a lot of, I would say a large position in a GEP. I started building last year. I started building up a position in JEPQ, which I would say right now isn't large, but it's getting there. I've been building that one up for a while as well. Obviously, owning precious metals, and I've been stacking that for many, many, many years. And I have I would say a relatively substantial position in cryptocurrency as well. So then I have other things too. I own real estate, I own classic cars, I own musical instruments, I own artwork. I'm a very diversified guy. I own a lot of things. So I think that's the way people need to play it here. I think there's a lot of opportunity here. At least, look, I understand, believe me, as much as anybody else, and that nothing makes sense here. Okay, we have a market that is not a market anymore. There's no fundamental factors at all supporting the environment we are in, at least in my view. This is all about easy money, more easy money, the promise of easy money, suppressed rates, which we're going to see a lot more moving forward here, currency devaluation on an epic scale moving forward as central banks are in a race to the bottom to destroy their currencies. We're getting a new system, period, the freaking end. They're bringing us to our freaking knees here, but understanding that gives us power. It's what gives us strength. And that's the only reason why I've been so far ahead of the curve on all this. And anybody that's been following my work, I mean, they've all benefit from it. And my promise to anyone, anywhere that follows my work is I will keep you ahead of the curve, period. That's my goal. That's what I want to do. Whatever I do, everyone, I'm an open book. Anyone that follows my work for any length of time knows exactly what I'm doing and why I'm doing it. And I don't push people into doing anything because I want people to think for themselves. I want people to say, okay, you know what, this makes sense to me, what Greg is saying. This doesn't make sense to me, what Greg is saying. And everyone's different too. Everyone is in a different place in their life, period. So it's very difficult. People ask me all the time, and I'm sure you get the same thing. Hey, where should I put my cash to work? What should I do? We could throw out all kinds of things, but everybody's got to think about their own situation and what would be the best place for them at this point. I think people need to be, I'm going to say something insane that people aren't going to believe, but I've been telling people this for years and years and years and years. Stay long the market. The Fed is going to prop this up. We got the Treasury now working with the Fed to prop up the stock market here as the economy free falls. We're getting lower rates. What does it do? The mechanism is very simple. When you have a situation where the Fed is giving itself permission to inflate, issuing debt through one door by creating currency, buying it back through another door here, buying all the debt here. This mechanism is massively inflationary, but it's also stock market positive. It opens up a doorway for cash to make its way into risk assets. This mechanism is going to continue until it doesn't. And I have a tool that's free to everyone on this planet who wants to use it on my website. It's called the MMRI, Mannarino Market Risk Indicator. I came up with this a while back. It basically measures risk. It's a graph of what the Fed is doing with regard to buying the debt and looking at the dollar on a relative strength basis. It comes up with a little equation, and it comes up color coded so people take advantage of that. It's right on my website, traderschoice.net. It's free, no signups, no anything. So take advantage of that. And as long as that mechanism that's going on here, which we're seeing, the MMRI drop now continues, we're going to see a few factors. We're going to see the market go higher. We're going to see cryptocurrencies go on sale. We're going to see gold and silver, commodities across the board go on sale. The game is risk on. The game remains risk on until it doesn't. And when it doesn't, it's a very simple for us to see as well, because we're going to see, look, everyone's looking at the stock market, and you know this. Look at the Dow 30, the Dow 30, the Dow 30, big freaking deal. Okay, we're looking at 30 companies here. You turn on the Bloomberg, the CNBCs, the Fox Business, and they never talk about the broader market. It's always about the Dow 30. Okay, they have people like fixated on it, but the big deal, what we need to watch is the debt market. The debt market is the key. Everything else derives value from action in the debt market. Pretty straightforward, pretty obvious here. So what does that mean? The stock market and pretty much every other market becomes a derivative of what's happening in the debt market. So if we watch the debt market, we are going to have the biggest clue as to where the overall markets are going to go. When we eventually see a sell-off in this debt market, which is not going to be by accident, where we see a spiking, let's just say with the 10-year yield, which is the benchmark here, an uncontrolled sell-off in the debt market, that's when we know the stock markets of the world are going to follow. And everyone's going to run to the door at the same time. They're all going to run to the door at the same time like they always do. World markets are going to crater, and cash is just going to move from one reality into another. And I think it's going to go into commodities in a massive way across the board, especially into things like gold, especially silver, my favorite asset of all time. I also think it's going into cryptocurrencies in a massive way as well, and other things. But the cash doesn't, you know this, money does not grow little money wings or cash and fly away to money heaven. It just moves through the markets in what I believe are predictable patterns. Now, if we know that, we can stay ahead of it all. And that's pretty much where I'm at.
Well, I think one of the major reasons that the gold price is still around 2,400 is because those non-G7 central banks, they're not buying the debt. Like you said, they're not net buyers of US Treasury. So China, Japan, Germany, the large purchasers of treasuries that ran large trade surpluses, they would recycle for decades and buy US Treasuries post World War II. They have stopped their purchases. In fact, I think China has sold the most US Treasuries in the last 6 months, and Japan is now a net seller to defend their own currency. So we're starting to see those countries outside the G7 move into gold tonnage instead of buying treasuries.
Well, that's very interesting that you said that. And yes, you're absolutely right. And that's exactly what they are doing here. But then one has to sit back and say, well, who's buying what they're selling? There's no such thing as a one-way transaction. Okay. If someone's selling, there's someone buying. And I'm going to give everyone out here who's listening one guess as to who that is. A central bank's goal is very simple. For those of you maybe hearing me talk for the first time, or Jason maybe, central banks have one goal and one goal only. That is to one day own it all, to be the lenders and buyers of last resort. And that's exactly what they're doing here. So if you have, let's say, for example, and you're right on China, they're dumping more debt than ever in history. Who's buying it? You can't, if no one was buying it, they could be selling it. You see what I'm saying? So people have to start thinking more about along those kind of lines here. And this is where, again, who's more than happy to buy it all? Of course, it's going to be the Federal Reserve.
Well, also the U.S. commercial banks are buying it too. So you've seen the money supply numbers are actually growing again for U.S. commercial banks with fractional reserve banking, but they're not lending into the economy. They're actually buying treasuries with the new currency that they're creating. So they're monetizing debt that way.
Well, they're going to find every other way to do that. Again, that's part of the game too. People have to understand that that's exactly the truth here. So what are they going to do about it? What are you going to do about it? We could, people sitting here and they know this is going on. I mean, obviously, this is stuff that I think most people at least follow our work is going on here. But again, it's about, okay, what do you do? You got to sit back and do nothing. You're going to go sit in a corner somewhere and suck your thumb off? No, you have to think about what you need to do to get yourself in the right spots. Because why are they doing all this? Obviously, it's being done for a reason. First of all, and then we got this other old issue, dude, that you probably know way more about this than even I do. That's really the truth. This is commercial real estate issue. The fact that we have the smaller and regional banks in all kinds of trouble with bloated balance sheets, loaded with bad debt, and that is also involving the larger institution, which is being hidden. I was probably the first guy, maybe, I don't know if you know this, who started saying we have a problem here with the smaller and regional banks. No loans, no deposits, no deals. Okay, it was pretty obvious that there was a problem. This is going back a couple of years ago. And then all of a sudden now we're starting to see the cracks in the system. This is being hidden from people, all this. All the bad debt that's on the balance sheets of these institutions. The smaller banks, in my view, and the regional institutions are being set up to fall. And the larger banks are going to buy their assets, the good assets, for pennies on the dollar, when you and me and everybody else get stuck with the dog crap. And just, so it always happens here. We're going to see a consolidation of power on an epic scale moving forward. And with regard to the Wall Street banks, there's one particular one that I don't like, and it just happens to be I've been telling people to watch Bank of America for I don't know how freaking long. Who's been dumping billions of shares here, of dollars worth of shares of Bank of America? Warren Buffett. So there's a problem here with that institution. And I think they're being set up to fall as the scapegoat. So people need to be careful about that too. There's so many facets. There's so much going on right now. But what it really comes down to is understanding the dynamics that are in play, that we're going to see debts and deficits skyrocket way, way worse than we are now. We're going to see oceans of debt being pulled into the system, much more inflation, much more currency devaluation, much more asset purchases by the Federal Reserve. And who's going to benefit from that? Well, they are, because obviously they earn interest on their balance sheet and they're paying dividends to their member banks as well, who are more than happy to load it up again. The Fed's balance sheet is at what, 7.3 trillion? Watch what's going to happen to the Fed's balance sheet. Fed's balance sheet is going to be over 10 in a very short period of time. And then again, when they're eventually ready to pull the plug, the real action is going to start not in the stock market where they want everybody to look, but it's going to be in the debt market. And this time we're going to be leading into and this, everybody knows this, I think. The issue in 2008 wasn't about, it was the stock market crashing with the Dow going from 12 to 6,000. It was about the credit markets that were locking up. It was we were walking into a locking up of the system, the credit freeze, and we're going to get that again this time.
Well, the banks were insolvent too. So
No, well, the banks are insolvent now too. We have a zero reserve system. We don't even have a fractional reserve system anymore. The banks are insolvent. Let's just talk about that for a second. The entire system is bankrupt. The entire system operates in a perpetual vacuum, which can never be filled. The debt must grow. This is a debt-based system. Most people have no idea how this works. You do, of course, and probably the people that follow your work and my work, I'm sure they have a perspective on this. But the system must constantly pull more debt in. The moment that it stops doing that, it implodes. It's debt based. The debt must constantly be added to. They must find reasons to add to the debt, and it operates in, again, this perpetual ongoing vacuum. It's a black hole that can never be filled. The system is bankrupt, and it can only function that way. And that's, again, why we're seeing the side effect of all this debt creation, and why society around the world, and this isn't just a United States problem. Economies around the world are in shambles. People can't survive. Here in the United States alone, by their own numbers, 78% of working people are living paycheck to paycheck. They're one paycheck from the street. And that's a booming economy. That's, let's see, in the words of our illustrious President Biden, that we are the envy of the world. Really? Honestly? Yeah, sure. Maybe for the 1% and 2%ers who are closest to the money, because they're the ones that always benefit from this. Who benefits from all this money creation, from debt creation? It's always the 1% and 2%ers. They're closer to the money. And then, of course, the rest of us are told that trickle-down economics is the way to go. Let's make the rich richer, and we're all going to benefit by that. You got to be kidding me. And that's what we have. That's what we're being sold by now. We're so-called loving, caring people running for the presidency right now. It's an insane asylum, Jason. That's what we're involved in right now. And unfortunately, people better get hip to the situation. They better get hip to it now. They better start doing the right thing, making the right moves, because the system is designed to destroy most people. Few people who understand the system, like you and I, and the people that follow our work, are going to benefit from it. Most people are going down, unfortunately. The more people that listen to this kind of stuff, the more people, hopefully, will get themselves on the right side of this.
what you described with the credit creation growth, and I believe the global economy added over $100 trillion of debt, with government debt and private sector consumer credit and corporate debt over the last 15 or so years. I would say 2008, the rules changed enormously, and basically the system went to more or less a debt-based fiat currency and credit Ponzi scheme where debt had to grow, and all the people in power that were doing all the bailouts and pulling all the levers, Greg, I think they just feared any type of deflation, because if the credit stopped or they didn't bail out, say, a large bank like Credit Suisse or this fifth largest Japanese bank recently, that could potentially mean the other banks start to fail rapidly like dominoes, and then you get a run on all the banks and the currencies.
Well, eventually, that's exactly what's going to happen. It's being set up anyway. And this is probably another reason why well, first of all, we already have a 99% digital system, and that's obviously where we're going to end up going. So they don't have to worry about things like bank runs, because there's nothing to run to get your cash out, because there ain't no cash there anyway. Look, it's a setup, quite obviously. And I think that people like you and me have really, dude, going back as far as we have gone, we have tried, and I think done more to try to wake people up than most other people. Honestly, you and I were out here really before most everybody else was. We saw things out there that other people weren't seeing. And unfortunately, most people still don't. But the people that I think, at least, that follow our work, we're waking people up. We're letting them understand what's happening. We're making a positive difference. And that, to me, means everything.
Well, I broke the story in 2014 because I got information from someone in a high-level IMF meeting in Washington, D.C., that the currency swap lines to the European Central Bank and the other G7 central banks were still ongoing. So the Federal Reserve Bank and the Treasury were denying that the currency swap lines were still ongoing. They said, like, after 2010, the currency swap lines ended. I mean, they still use them. I suspect, Greg, that with the problems with Japan and the Japanese yen, the Bank of Japan, I think the Bank of Japan just got currency swap lines from the Federal Reserve Bank. There was a weird press release after Janet Yellen went and visited China and in Japan that the U.S. was going to approve some type of market intervention from Japan with Janet Yellen after her visit, and then they threatened to tap them with currency manipulator after they sounded like they negotiated a currency swap line deal.
Dude, of course that's going on. Things are going on right under our nose that we're not allowed to know about all the time, every day. And again, they can get away with this stuff because why? Because there is zero accountability anymore, and everyone gets a trophy at the very end. No one cares. All people are concerned about is, and it's a sad thing, is mostly about themselves. They're happy that their home values today new record high, home affordability more new record low. They're worried about their investments, and which is very, we all need to do that. That's for sure. But it's all they focus on. Oh, okay, the markets are doing good, so everything is just fine. Let's ignore everything else. It's an illusion. It's not real. It's paper. These are not realized gains across the board anywhere until you pull it out of wherever it's in. It's just people are locked into this kind of a mindset, and of course, and they wonder. Then they wonder when it all goes down the toilet. They say, well, what happened? Why did it happen again? Of course, there's no accountability, and the big wigs all get their big fat bonuses while people lose. It's just never going to change. It's how it's baked into the system. And my main concern here is just trying to let people understand what's happening to them and why. And then if they want to take action, that's fine. At least they're aware of what's going on here. People like you and me and the people that follow our work are able to see things maybe a little differently than most people, because again, most people get their news and their information from the what I call the propaganda ministry, the CNBC, the Bloomberg, the Fox Business, all this nonsensical garbage that they're reading off of a teleprompter. You know what bothers me? You turn on CNBC, they cover a specific story. You turn on Bloomberg, by some miracle, they're talking about the same thing. You turn on another channel, same thing. It's like they get the script at the same time. Every time I see that, I start laughing. It used to freak me out, but now I expect it because it happens invariably. And I mean, it's a psyop. None of it's real. It's all just propaganda to keep people in line, to get them to believe in a system that is defunct, bankrupt, and destitute. And it's just going to keep on functioning. The biggest thing that I just can't, people don't understand that, every day they get up for work and they go out and they work for the privilege to borrow those dollars. They don't own them. Those dollars or euros, whatever, they aren't theirs. They're owned by the issuing central bank. They're owed back to the issuing central bank, plus interest to create nothing. We've never really been paid. We've been paid in debt. It's an insane thing. But then we got to pay tax on that debt. You can't make this stuff up if you try to. This is how twisted it is. But people believe that that's the system. That's how it's supposed to work. It was never supposed to work like that. We were supposed to have a currency backed by a commodity, not backed by the full faith and credit of a central bank, who are, again, in my opinion, and I've been telling people this forever now, public enemy number one.
Well, this is the problem with debt-based fiat currencies and fractional reserve banking. And then since 2008, I mean, the system went to insane amounts of goalpost changes, rules changes, goalpost moving, and bailouts. And there's just tons. It's like always like every couple of months now, there's a new liquidity program.
Dude, of course there is. And they're going to come up with things through the back door, through the front door, through the side door, whatever they got to do to keep the system going. And I think what we're going to see mostly, and how it's going to affect people, is two things. I've been telling people for many, many months now. Expect a lot more currency devaluation, not just by the Fed, by central banks around the world who are increasing their stranglehold. It's like a war. I've been telling people, you have central banks in every continent around the world. That's their bases, and they are winning. We are being destroyed by these institutions that are sucking the purchasing power out of the currency. Central banks who are buying it all, buying all the debt, keeping rates artificially suppressed here for the longest time, creating unbelievable distortions across the spectrum of asset classes. There's no price discovery today. I mean, it's pretty hard to argue that we have a real price discovery mechanism at all in this market. There isn't any. It isn't even a market. It's a free for all, and there's going to be as you and I have been saying, dude, for 10 years.
You lived in Vegas a long time. I mean, it's kind of a rigged casino where like the people in power, the market makers, or the people trading these 0-day options or other stuff or derivatives, they decide where they want to manipulate the market. I mean, the newest one I've seen, and Greg, you were a Wall Street floor trader for many years. was there intentional oil market manipulation to cap the oil price, say 6 months before a November election, a major congressional or presidential election? Because it looks like the oil prices lately have been just capped. Basically, like the people in power have decided we don't want higher oil prices to influence the undecided swing voter about inflation and gasoline prices before the election. That's what it seems, because like the oil prices are basically, they're not moving at all on any fundamental data. They're just like either stuck in a trading range or headed down through the election, I would guess.
Let me just say this, and as far back as anyone wants to go, and I mean as far back as anyone wants to go, there's always been people pulling the strings. There's always been people manipulating the price action of everything for their own benefit and making people pay for it. I've been telling people what they should do, and this would be a real eye opener for anyone that's listening to this right now. Watch Enron, the smartest guys in the room, the largest corporate bankruptcy in United States history. The United States has become Enron in every way. You watch that movie and you will see what's happening right here in the United States and around the world. And the whole world has been turning. I used to say it was the United States, but now I believe it's gone. It's gone beyond that. Obviously, the world has become Enron. It's a whole game. It's a game. I've been telling people for the longest time. It's a game. And you know the reason why I'm drawn to this thing, and I've been drawn to this for for probably too long, truthfully, is to me, I really think of it in the terms that it is a game. And I say, okay, if we know certain things are happening, and and if you can determine that these things are, then we know what action to take. It's too easy. And I think that's exactly the kind of a situation that we're in now. And they're look, those people that do pull the strings, they always tell us what they're going to do before they're going to do it. This is kind of their MO, and they laugh at us. But they think people are too stupid. You see, there are some that have a heightened state of awareness. I tell people on my blog all the time, raise your awareness. When you see, for example, a particular headline and it strikes you a certain way, what's missing from it? What's the message here? I think all the wording, I think everything is picked very carefully. Nothing happens
Did
again by
did
accident.
you
It's all the
did you see that
manipulation.
bullshit one from the Wall Street Journal? Sorry to interrupt you about commercial real estate. There was a misleading article headline in the Wall Street Journal in the last day or two, and it said this spike surge in bankruptcies and delinquencies means the bottom in commercial real estate was in. I couldn't believe someone actually wrote that.
Well, I mean, it's either with someone that was being told to say that, probably. Look, we haven't even seen that. In fact, I've been talking about this a little bit here and there. It's a black hole wrapped up in a black hole, wrapped up in a black hole, and it's being hidden from people. All the bad debt that these institutions are holding, and how they're going to. What you have here is an interesting concept. Is we talking about a manipulated headline. There was a headline just, I think it was yesterday or the day before, where regional banks are about to dump billions of bad debt onto the market as bond yields now are dropping, and will be dropping much more. I think from here, these institutions are taking on some pretty substantial losses. And what they're going to try to do is make up some of those losses and dump some of that bad. They're taking severe losses on them. I don't know who's going to be buying. You got to be out of your freaking mind. But I guess there's going to be a buyer somewhere, and then they're going to be reinvesting it again in the bond market, knowing. And I've been telling people this for I don't know how long. I've been for at least 6 months, maybe 8. I've been telling people that we're going to see a massive rally in the debt market, and I think we pretty much I nailed that one to the wall. We've seen that coming out. We haven't seen anything yet. I think we're going to see a pretty substantial drop in bond yields moving forward. And I think extremely substantial. And again, money creation and all this, being
Well,
cash, being
it's
units of
just
debt as
math at
well.
this point. Would you say it's just math at this point, though? The math just doesn't work no matter what the Fed has interest rates at, because the debt is growing at what, $1 trillion every 100 days now, give or take. And soon it could be every 90 days that $1 trillion is added. So the interest payments on the debt, I mean, it's feeding on itself. But all these governments, whether it's Japan, European Central Bank, Bank of England, Federal Reserve Bank, the U.S. government, all these central banks, it looks like they're all going to have to do some type of yield curve control, let inflation run hot, devalue their currency, and then create new currency units to buy government debt so the government doesn't have to cut back. Would you suspect that that's kind of the game plan for a lot of these governments now?
100%. Well, it's happening now. That's exactly what's going to happen. It's not going to stop. It's not going to look when. What we're experiencing is something I've told people maybe at least 5 years ago, maybe longer than that, where we're going to see what I I came up with this term, I don't know where it just hit me one day, a maximum saturation, where we would start to see exactly what we're seeing now: uncontrolled inflation, debts and deficits hyperballooning, people that are suffering from it. This is it. We're here now in this moment of maximum saturation, and we're just in the early stages of it. And all this stuff that you're talking about here that you just said is going to go on and get much more dramatic from here. Look, they can't they have to inflate. They have to inflate, and they can't, which means they will exacerbate all of the underlying issues to a much greater degree until they're done. What they're doing here is creating a slave system. It already is a slave system, but more slaves dependent on it. Once they have more, as many people as they can dependent on the current system, that's when they're going to pull the plug. That's when we're going to see the meltdown start in the debt market. That's where it's going to, it's already, someone could argue that it's happening now. And that's what we're seeing, why we're seeing what we're seeing now. But the real meltdown is going to be, again, when we start to see yields spike in an uncontrolled fashion. We're talking about 20, 30, 40, 50 basis points, maybe more in a real sell-off here with regard to the 10-year yield. And what's that going to do? It's a no-brainer. It's a no-brainer. You're going to see stock markets plummet. Why? Because it's the same story. Everybody runs to the door at the same time. You know how this works, Jason, better than anybody else that I know. You put it in order to sell your XYZ stock. You put it in. No one wants to buy your limit order. I will sell it for X. No one wants to buy. Okay, you mark it down. You put a new limit order in. No one wants to buy. The stock is cratering. All of a sudden, you want to take anything for it. So now you put in a market order, and then the market makers rip you off, and so does everybody else. But that's exactly what's going to happen. And that's why the markets are always, an elevator up, and then, it's like falling off of a cliff. You go slowly up, and then everyone runs to the door at the same time. Dude, this is going to be huge when this thing actually comes down, because of the distortion that exists today are beyond anyone's wildest, even me, and even probably, I don't want to speak for you, but they've gotten so wild that how the hell can we actually make sense of anything? It doesn't make sense no more. Like you said, the math doesn't add up. Nothing adds up, dude. It's a free-for-all, and we're going to pay the price for it because we always do.
And now we have fake economic data, and I think I agree
it's all fake.
Well, you also cannot taper a Ponzi scheme, and it seems that we're going further and further along the road to serfdom, because the real inflation rate with people's food bills, all their basics to survive, rent, a monthly mortgage payment, all these things are up enormously, and all you hear about on business television is that inflation is coming down, it's under control. Like, the average American has gotten decimated on Main Street, the consumer and small business, from the Fed raising interest rates. Meanwhile, the rich people just got a ton of extra investment income on their money market funds or short-term U.S. treasuries.
Neo Feudalism, bro. I've been warning people of this for years. Neo Feudalism, and that's what they're doing. The biggest issue here, the bigger issue may be that people are surrendering. In other words, it's this Pavlovian kind of learned helplessness. People should look this up. What ends up happening, like the Pavlov's dog, is they enter into a state where they just surrender, and they just allow this, whatever it is, to consume them. And people are doing that, and they're willing to do it. They want to be taken care of. They surrender. They throw up their arms. So they can be taken care of by the government, and that's really the government being the Federal Reserve, obviously in this case. Who runs the? I ask people, okay, the government. Oh, who's the government? Well, it's Biden right now, and it's going to be Trump. No, who runs the economy? It's the central banks. Who runs the financial markets? It's the central banks. Who runs the financial system? The monetary system is central banks. They're the ones that run it all. It's not kings, queens, monarchs, or dictators. It's them, and they are the enemy. But we're being told, of course, it's these people's fault, or it's those people's fault, or everything that they can use to keep people distracted and deceived. I said we were going to see, at the end of last year, I did a series of videos on that we were going to see this really play out this year. And I think it's very hard to argue that is not what's happening right now, especially moving towards the presidential selection cycle that we're going into anyway.
Yeah, I agree. You also have people fighting amongst each other. There's tons and tons of infighting among, like, race, class, gender, age. I mean, you have the younger adults, the millennials, Generation Zs, fighting with the older retirees, the boomers, blaming them for the mess that they have and all the inflation, how they can't afford to buy a house or rent, all these things because the boomers have benefited from all this asset price inflation now for decades.
Yeah, well, like I said, that's where people are being pushed, bro. They're being pushed in that direction. It's no accident. Nothing here is an accident, what we're seeing, bro. And I think it's pretty obvious. We're being pushed there deliberately. And people, they don't know what's happening to them because, again, they're being lied to. They're being deceived. They're told to look here, don't look over there. And it's coming down around them. They better start to wake up, bro.
Yeah, I agree. The Federal Reserve Bank was writing articles about this. Ben Bernanke was writing op-eds in 2010 about the wealth effect, and Alan Greenspan Fed was doing that too. So for 15, 20 years, they were openly promoting the wealth effect to inflate home prices in the stock market.
Of course. And that's the way it's always going to be. It's not going to change. It's always the same. And who benefits from this? Not the regular guy or the regular girl. They get destroyed. Well, the 1% and 2%ers are laughing. They're laughing. And unfortunately, it's not going to change no matter what.
Well, Wall Street and the government also benefited because the government is not only are they benefiting from debt-based fiat currencies, right, all the spending, they're also benefiting from collecting taxes on all the asset price inflation too.
Of course, bro. Again, and how does that help the people? We're dead. We're dead in the water, bro. But again, at the same time, we got that's why we got to constantly remain diligent. We got to look for every single look. Our enemies work 24/7. So that means we have to be just as diligent as they are. And whatever they do, in my opinion, there's always a counter strategy. This is a war. This is a war between us and them. And most people, and I mean most people, are going to lose. But people who understand the system, what do you think? And you know this, why people aren't allowed to know how the system really works. I mean, we've been warned multiple. Here's a couple. Let me just read these real quick. I got to get out of here soon, but let me just read this real quick. This was Henry Ford. It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. That was Henry Ford. This was President Garfield who was assassinated. He writes this: whomever controls the volume of money is absolute master of all industry and commerce. When you realize that the entire system is very easily controlled one way or the other by a few powerful men at the top, you will not have to be told how periods of inflation and depression originate. That guy was assassinated.
JFK too. JFK was talking about ending the Federal Reserve Bank and the intelligence agency, and within about a year, he was also assassinated. So,
well, that should tell us something. Dude, love being on your show here, bro. We got to do this more often.
Excellent. Well, if my listeners want to follow your YouTube videos, where are they located? Did you move them all to Rumble, or are they still on YouTube?
No, everything is on YouTube, man. You can find me. Just Google me. I'm everywhere these days.
And you have your website, traderschoice.net, with the indicator. You also have a newsletter?
Yes. Take advantage of that. Traderschoice.net, top of the second page. You'll see the MMRI. Follow that. I urge people to. I couldn't have made it easier for people. It's color-coded. There's a number there. It lets you understand where risk is. And right now, it's dropping precipitously, which means this market's going much higher, at least in the short run. And we need to take advantage of that. And at the same time, commodities are going to go on sale even more so than they are now. So take advantage of that too.